Good evening, everyone. Thank you for joining us today on Master Speak. Now, it's been almost 3 months since we introduced this platform, and since then, we have received great feedback and encouragement from all of you. A lot of our viewers have been attending these sessions very regularly, and that makes it very satisfying for us, as the whole concept behind Master Speak was to help the community in these uncertain and unprecedented times by bringing the best minds and some of the top leaders from across the world to share their perspective and thoughts with all of us. Last week, on Friday, we had Mr. Arjun Malhotra share his personal journey with all of us, from being a founder of HCL to becoming an accomplished entrepreneur. And he's not stopping, as we all heard from him last Friday. You can find that recording and many more recordings of our previous session by visiting our page on LinkedIn and Facebook. Today's topic is around wealth management and where it matters the most. This is the insight from a 10-year journey in rural India our guest speaker has had. So before I introduce you all to her, let me first do a quick check. I hope all of you who are watching the show are doing fine, your families are safe, and everybody is healthy. Let us know which city you're joining us from. We will all love to know where all are you joining us from on this Master Speak forum. Lastly, post your questions, comments as we are into the show in the comment section. Keep your questions coming. The top two questions will be picked at the end of the show as two lucky questions to receive Amazon gift voucher from us. So make sure that you keep your questions coming at us. I'm going to pick those questions and ask those questions to our guest speaker for today. Now, let me introduce our guest speaker, Bindu Ananth. She is the co-founder and chair of Dwara Trust. She was the board chair of Northern Arc Capital from 2009 to 2018. Prior to this, Bindu worked in ICICI Bank's microfinance team between 2001 and 2005 and was head of the new product development team with their rural banking group. She is an independent director of Neo Growth, a member of the executive committee of CGAP, and member of Columbia University's advisory board for its India initiative. In 2017, Bindu was featured by Forbes as one of India's leading women leaders. It's such a pleasure to have Bindu with us today and share her perspective with all our audience. Bindu, thank you very much for joining us. It's simply a pleasure to have you with us, and over to you for your session.
Thank you so much, Rakesh. Hi, everyone. It's great to be here. Thank you to the Future Generali team for inviting me to speak at this platform. I understand that I'm in very good company and that you've had some very good talks. So as my intro made clear, I have worked in the area of financial services for the poor all my career from different vantage points, a banker, a last mile provider, and more recently as an advocate for customers. So a lot of my presentation today will draw upon that journey. And I hope that the broader theme for today is, really to think a little bit about how can finance be a larger force for good, both in our personal lives and for the world in general. So Ashish, if we can fire up the presentation. Next slide, please. Great. So just to get started, I think when we think about, what is finance, what is the role that finance plays in our lives, I'm pretty sure that we think about, things like a bank account or a credit card or a home loan. And in fact, a lot of companies really compete on the basis of, my credit card is, platinum in color, and you get extra miles on your, frequent flyer if you use this credit card. So kind of a broad sense of finance is very much as, the way we think about it, is sort of an FMCG frame, and it has become quite productized. And Ashish, click again. And really the way I have come to think about finance, or at least the way it should be, as opposed to the way it is right now, is, really this picture. And, what is this? This is a, noise cancelling headphone. And really our vision is that if finance works well, it should play the role of similar to what a noise cancelling headphone does. What do I mean by that? It means that we have a lot of uncertainties going on in our life, right? Lots of ups and downs, and and finance is not a physical product. It's not like a car or a watch. It surely does not inherently give us any joy. We don't wake up in the middle of the night thinking about our favorite mutual fund. At least most of us don't. And even when you take something like a loan, it's not really free money. It's not somebody else's money. You're really implicitly promising the lender that you have the right to some share of my future income. So it's helpful to keep in mind that finance is not a physical sort of product. Credit card is a manifestation. It's a physical manifestation. But it's really meant to be something more than that, and we'll explore that, of course, as we go along in the talk. Neither can we really put labels on financial services. So, for example, I think many people have been batting for ideas such as, there are some bad products in financial services, but you can't really say, put a label there and say, beware toxic product, because the exact same loan that might help one. So where was I? So I was just trying to give a bit of a sense about, a different perspective to think about financial services. And so when I say that, for me, the analogy that makes most sense is a noise cancelling headphone. It's really this idea that, rather than think about finance as product A and product B, can it really help to deal with all of the ups and downs of our lives? And convert it into some steady stream, so that really at the end of the day, our goals for the future are realized, right? At the end of the day, that's what we care about, whether it's you or me or a small entrepreneur in a village. We have certain dreams and goals for the future, and finance at best should be a tool, certainly not an end in itself. But as a tool, it should be far more powerful than what it is today. So, for example, whether interest rates go up or down, whether equity markets go up or down, and over the next, let's say, 10, 20 years, and these are things that are incredibly hard for, even trained economists to predict, forget you and I. But what I really care about is, at the end of the day, irrespective of all of that, when I retire, say 25 years from now, I should have a certain standard of living that I can maintain post-retirement. I'm not really trying to predict what the market is 25 years from now. I'm just trying to more get a sense of, will I be able to live comfortably in retirement? Similarly, if you think about it from a farmer's standpoint, whether it rains or not, a farmer should really be able to afford to pay his daughter's school fees that season. Our lives and kind of key goals should not be dependent on some of the ups and downs. And that's really the idea of good finance. That might not be what we experience today, but it's really what, if finance works well, it should be able to do for us. And when we view it that way, none of us, so this is not really, this talk is not, at some level, it's about my experience of working in rural India and working particularly with low-income households. But at another level, it's also about the retail financial services industry as a whole, and whether it's delivering on its promise. And so when you think about it from this standpoint, none of us really has access to good quality financial services. At most, what we have is we have access to a list of products, right? I have bank account A, I have insurance policy B, and mutual fund X. But is the sum total of all of this adequate? Will it keep me in good stead? Will my goals be on track, irrespective of what happens for the next few years? Unfortunately, I think the answer to that is that monkey is entirely on our back. It is on the user. And there are very, very few financial institutions out there who are really sort of approaching this in a holistic sense. So, keep in mind this notion of, the noise cancelling headphones, and we'll hopefully come back to that analogy a little bit more as we go along. Ashish, next slide, please.
So, one of the things I want to say, and no surprise here, is that, I do think, in my view, the financial system has really failed much of our country and people. And most of us are really sort of fending for ourselves. And of course, the problem gets more acute as you think about when you go down in the income sort of spectrum. Just some instances of it. Why do I make such a strong statement? Again, like I said, it's not really just about the poor. If you think about financial assets, access to pensions, even for the rich in India, even for what we might think of as the top 10%, there is, very little access to things like good long-term pensions. Most of us, our assets are held in physical form, gold, real estate, etc. While per se that's not a bad idea, Indians have disproportionately high percentage of their assets tied up in physical form, which means that their portfolios are not adequately diversified, and that comes with its own issues. And again, that's really not a problem of the poor. It cuts across. Another sort of fact, data point that is, very sobering, and it's kind of live right now that we are living through COVID, is that nearly 5 crore people in our country every year fall into poverty because of what is called out-of-pocket healthcare expenditure, which is really linked typically to some sort of catastrophic medical event and the hospital bills that come out of it. And remember, here we are talking about not people who were poor to start with, but people who are otherwise doing sort of okay, but fell into poverty, so sort of slid back in terms of their lifestyle. And that's entirely due to out-of-pocket health expenditure, which should sort of make you pause and say, well, this should be an entirely preventable sort of issue. There are things that we can't control, but healthcare expenditure, etc., fairly predictable, and it's kind of a known issue, and surely we can do better as a financial system in terms of preventing all of this. And kind of final example I want to talk about as a reason why I think the financial sector is failing our country, and this one is very sobering. It's a study done by a researcher in rural, I think, Andhra Pradesh, if I'm not mistaken. And what she finds is very stunning. So she finds that more rainfall in the first 2 years of life of a girl child increases the likelihood of her survival. Now, what does this mean? It's pretty stunning. It means that, the survival rates of, girl children seem to have something to do with, rainfall, which is, not a correlation that one might ordinarily think of. But the point here is that in the absence of good ways to manage risk, and many countries have scaled up products like rainfall insurance and health insurance, of course. But in the absence of ways to manage risk, people are sort of left holding the can, and then they have to do it in the way that they understand. So you will see that when rainfall fails, it lends itself, households, to a whole range of distress actions, selling assets, pulling kids out of school, and in this sort of extreme example that the researcher finds, even affects survival. So this is, I think, something that's, as somebody who's worked in this for almost 20 years now, it's something we confront, and of course we are trying to change this, but it is helpful to think that we understand and acknowledge that we do have a fairly long way to go across the country, not just for poor people. Next slide, please. I hope this slide is visible, but don't worry if you can't see it. I will talk you through it. For the next 5 odd minutes, I want to talk a little bit about, having said that, in general, things are not as great as they should be. I want to put the spotlight a little bit in terms of what we have learned in terms of low-income households in particular. And one of the things that we do is to understand these households better and their financial lives better. Very much like companies, we think it's important to look at balance sheets, profit and loss statements, and cash flow, right? So these three, in a way, really give you a good sense of what is happening at the household level. From this slide, and again, if it's not visible, apologies. I think some of the main takeaways here is one, as I briefly mentioned already, physical assets account for a large percentage. Almost 90% of household wealth is tied up in physical assets. And while most of us, we immediately go to gold. Gold is certainly an important part of it. But agricultural land is, again, a very important part of holdings. And, many of you who work in financial services will immediately sort of recognize the problem here. It's a little bit like if I work in Infosys and all of my wealth is held as stock in Infosys, it really means that I'm holding a highly correlated position. So tomorrow, if something happens to the IT industry, not only is my job at risk, well, lo and behold, my entire wealth as well will face a shock because in some sense, it's the same factor that's affecting both. That's the same sort of notion when you think about a farmer or an agricultural laborer holding much of their wealth in agricultural land. If rainfall fails, not only is it hard for me to get access to labor, now also much of my portfolio takes a heavy knock. So this issue of how do we get people to diversify away from physical assets to financial assets, to my mind, is a very important theme overall in financial inclusion, and something that a lot of work remains to be done. If you go to the next slide, the other issue that we confront a lot, particularly because when you think about rural agricultural households, there's a lot of seasonality. Ashish, the next slide, please. Which is to say, we are not talking about salaried people. Almost everybody is either a casual laborer or is self-employed in agri or non-agri. And increasingly, as we know, people are doing a little bit of both. Even rural households are fairly diversified in terms of the mix between agri and non-agri. And so the number one feature there, again, for those of us in finance, is to say, if you have a steady sort of salary paycheck versus you have, decent income in 5 months, no income at all in 2 months, it's a fundamentally different sort of situation and challenge. So if you look at this bar on the bottom left of the screen, if you can't see anything else, if you can see at least the dots there, this is a representation of an actual household's monthly cash flows across 12 months. So each of the dots represents monthly income, and you see all of the up and down there. If we were to plot this for ourselves, this is just a fairly straight line. Maybe there is a nice blip in March around bonus time, but otherwise it's a fairly sort of straight line. But for much of India, this picture that you see on the screen, that is closer to what it looks like. And in this particular case, for example, the dotted line that you see across the middle, that is the poverty line. And this is actually a very interesting issue that we have learned through our work, because in general, we think about, so-and-so person is below poverty line or poor, and so-and-so is not. Well, what this picture shows you is that, well, it depends. If you ask me in March, my monthly income, given harvest, etc., was good. But if you come back and ask me that question in November, it will be a very different perspective. So this is this aspect of volatility in income, and therefore poverty is not really kind of a fixed idea. There is this whole issue around uncertainty. One of my favorite researchers in this field, Jonathan Murdoch, who works at New York University, he has a beautiful sort of way to talk about this. And one of his books, which is an absolute must read, it's called Portfolios of the Poor, which talks about these issues in a very accessible way. He said, think about it as kind of a, goldfish in a bowl. It's not enough that on average there is enough water. If there are many days in which there is not enough water, that goldfish is going to die. So averages, the poverty line, etc., can sometimes be misleading. But this issue of up and down is certainly a very important theme that all of us contend with when we think about wealth management for this sort of segment. Next slide. Okay, so now moving a little bit more to what I promised, which is, some takeaways from, my journey over the last 10 years, which is building this financial institution for rural India called KGFS. KGFS stands for Kshatriya Gramin Financial Services. It was very much inspired by this notion of regional rural banks, the idea that we need to build dedicated financial institutions for rural India, given that hundreds of millions of people live there, and it's not good enough for us to think about branches of ICICI or SBI, but we actually need to build dedicated financial institutions that understand these markets. And so I started my career in ICICI, and it was an amazing first job, learned a lot. But clearly, when thinking about this market, it was becoming increasingly clear that you need a different DNA, a different sort of approach to how you serve customers in these markets, for all the reasons we just talked about. Serving even a low-income salaried person is a very different cup of tea than serving somebody with a lot of income volatility, as is the case with agri-related households. So idea was very simple, and I'm sure many other people have thought about it as well, which is to say, then rather than think about just taking a product, a micro loan, and taking it to scale, can we build much more of a wealth management approach, even for rural India? And when we first sort of came up with this notion, for us, it was pretty natural, given that we think about finance as noise-canceling headphones. Immediately, it becomes clear that you can't build a cookie cutter type model in financial services. You need to be able to customize. And the idea of wealth management, people who have private bankers in the country, who are wealthy enough to have private bankers, know that the main contribution of a private banker, ideally it should be, not always the case, is that they will spend time with you, they will understand your specific circumstances and then respond to that, rather than come with a one-size-fits-all type approach. So to us, it seemed very basic. We need to find a way to bring that sort of customized approach. But of course, 10, 12 years ago when we started, there was a fair bit of skepticism, particularly to say, what are you talking about? These are households with annual incomes of 80,000, 1 lakh rupees. And so how are you going to make that work? What about your costs? Is there enough room for customization? And I'll tell you a little bit about how we've gone about it. It's, of course, remains work in progress, much to be done. But the core idea was to say, let's build a new cadre of people who think of themselves, in their heads, their self-identity is, I'm here to improve your financial well-being and to be your wealth manager. I'm not here to peddle product A or product B to you. And I think that's a fundamentally different sort of starting point. And the rest of my talk, the 15-20 minutes I have, what I've tried to do is to pull out sort of 4-5 high-level insights that at least I've had in thinking about our journey for the last 10 years. And I hope some of that resonates with you. And if there is interest later in Q&A, happy to talk about the specifics of KGFS, how it is set up and structured and so on and so forth. But for now, I want to stay with the central idea of building a cadre of wealth managers for rural India. So next slide, please. So my first insight, nothing earth-shattering, but I think something hardly done in financial services, is start with the customer and not the product. right? I think in finance, we've been a little bit guilty of if you have a hammer, everything looks like a nail. So, for example, whether we're talking about microloans or, credit cards, everybody is really starting with a product, and then it's about saying, how do I persuade the customer to buy this? There is almost, and when we do KYC on Know Your Customer, it's really about the formality of it. It's about proof of address, it's about proof of identity. There is never a notion of who's this person I'm dealing with? What are their circumstances? I pulled out this picture of one of our customers in KGFS. One might think that, okay, this is a Kirana shop, and what can I offer a Kirana shop? Well, they need a working capital loan, let's say, to expand their business. But it's also a full household behind it, right? With these 3 kids, and they have their education plans, and what they do with their business, the aspirations for the business, the willingness to take risk is intrinsically tied up to what is happening with the rest of the household. So it's always been very baffling for me and for all of us at Dwara that there's not been more of a sense of start with the customer. But I think it's just really a failing of the financial services kind of this industry, perhaps not true of other industries. And we'll talk about that in a little bit. So one of the things that we did practically is we said, before we do any product sale, for every customer, we will generate what's called a financial well-being report. And the financial well-being report is really the outcome of a deep 15, 20-minute conversation with a household that looks like this to understand, who are you, who are the members of your household, what is the schooling status of your kids. Very importantly, what are your goals for the future? What do you see for these 3 kids? What kind of education are you aspiring for? What do you want to do with the shop? So, without having that conversation, selling any financial product, to my mind, should even be, viewed as unethical because, there could be a mismatch. So after having that conversation, we generate for the household a little bit like what I told you earlier, a balance sheet, a P&L, a cash flow. And based on that, there is a sense of, okay, given everything that you've told me, we think these are your top 3 priorities. And that's always an interesting conversation because it may not be what the person thinks. So the person may have come to us saying that I need a loan for my shop. But after having these 15, 20-minute conversation and the financial well-being report, it becomes clear that, sure, you need to expand your shop and you need access to credit for that. But also, listen, you have 3 very young kids. Their future in education is completely dependent on you and your wife being able to go out, work, and earn an income. And therefore, life insurance for you and your wife, health insurance for you and your wife, very important. They may not walk in asking for that, but I think it is fundamental for a wealth manager to recognize the link between that family's aspirations and, in this case, for example, the role that insurance can play. So the financial well-being report for us has become the way in which the whole organization is forced to, start with the customer. You cannot have a product conversation unless you look at the entirety of the customer. So that's a specific example, and I think we all need to interpret this in our own way, but it's a very, I think, key issue and a missed opportunity if we don't engage as wealth managers with the customer and their reality and not just slivers of it. So that's sort of insight 1. The next slide is sort of the related point, but it's about, Ashish, if we can move forward. And so this is also something we've learned from experience, that it's not enough to just bring good intent. I think many of us mean well, particularly those of us working in rural areas, development sectors, so on and so forth. And of course, intent is important to get started. But in dealing with big problems such as improving financial well-being of rural areas, I think there definitely is a sense of what are you bringing to the table. what is what is the expertise that will make you successful in this journey. And so when we
I'm sorry, guys. I think we again have
some of the
encountered.
questions on our mind were, how much life insurance should a household buy? So we just saw in the previous slide a typical family of, 5, and you could have another customer who's slightly older, maybe with more grown-up kids. Does it make sense to sell the same amount of insurance to both households? That doesn't quite feel right, but what is a more technically precise answer? Exactly how much life insurance should I as a wealth manager recommend to household 1, and how much should I recommend to household 2? And when we went around, we asked actuaries, we consulted a few people, and it was pretty interesting because I think they were like, well, we've never been asked this question before. In general, sell as much as you can and how much you are able to convince the customer to do. And it was fairly uncharted territory. Similarly, how do you construct portfolios, good portfolios, when almost 90% of wealth is in physical assets? All your textbooks that write about diversification and asset allocation, all of it is built in a world in which you are dealing with risk-free assets and risky assets, and how do you do that allocation? No book has ever been written around the notion of what do you do when people, a lot of the assets are in the form of human capital and land and gold and a little bit of financial assets, right? So these are entirely new questions. And one of the things we ended up doing early on was, putting this book together. For those of you who can't see it, it's called Financial Engineering for Low-Income Households. It was co-edited by me and a colleague, Amit Shah, with contributions from many people who worked with us at that time. And what we tried to do this book was to say, well, we're not getting good answers from experts. So we're going to kind of put this together ourselves so that there's some guidance on some of these questions. And we took existing theory that was available at that time, and then sort of combined it with what we thought were important for the reality of our customers. So to go back to my earlier question of how much life insurance to sell to a household, today in KGFS, that rule is very much linked to this idea of human capital. And human capital, think about it as a net present value of future cash flows. So if I'm a young person, if I'm a 25-year-old versus I'm a 45-year-old, the younger person's human capital is much more because they just have a longer horizon over which they will be earning compared to a 45-year-old. So insurance is fundamentally linked to this because in some sense you're trying to protect the ongoing wealth of the household. So it makes absolutely no sense to just sell, 50,000 rupee insurance to everybody in the village, because each person, in fact, our experience has been that even fairly, maybe might consider low-income households of, agricultural laborer household, at the minimum, you're talking about optimal insurance coverage of something like 5 lakh rupees. And of course, can go up more depending on what else is happening with the household. So we actually ended up putting, and for many people, they were like, wow, this is overkill. But to us, it seemed fundamental to say, if you're going to put wealth managers on the spot, and I should clarify here that our wealth managers are all hired from local areas. They are 12th standard pass, BA, BCom pass, their first job really, young kids from the village. You can't say you are a wealth manager, put them in front of a customer, make all these big promises, and then not be able to provide technically correct, rigorous sort of advice. It can't be based on what you think is correct. There has to be sort of so we've invested very heavily in building that kind of background and try to make that accessible to the wealth manager. So each one of our 1,000+ wealth managers, if you go and ask them, explain to me what's human capital, as your customer would understand it in an accessible way. And if your customer asks you, why should I, madam, why are you asking me to buy, 5 lakh rupees of insurance? I'm a poor person. Each one of our wealth managers will be able to do so by drawing on this fundamental concept of human capital. And I think it's very important. Financial services has tended to be dominated a lot by marketing. And while that's important, I think we should also, set a higher bar in terms of what is the expertise you're bringing. And particularly if you have notions around improving financial well-being, etc., it has to be grounded in some good understanding of what works and what makes sense. So that's kind of insight 2. Next slide, please. So I want to speak briefly about also distribution and how do we think about last mile access, branch versus non-branch. So what you see here on the slide is just the exterior of a typical KGFS branch, very modest, 200 to 250 square feet, but located in a very central part of the village, typically close to a bus stand. And what we try to do is to sort of go away. When we did some of our early market research, a lot of people told us that they are afraid to walk into a branch, right? And if you put yourself in the shoes of customers who are not used to formal financial services, it indeed can be very intimidating. There are, shutters and the tellers sitting behind like a very secure area. There are people, dressed very formally. And for a poor person, a lot of this can be, fairly intimidating. So we thought a lot about design and making sure that it felt open, welcoming, all of that. But also, I think there was a real question around how should we think about the overall distribution network? Even when we started 10 odd years ago, there was a big push around digital mobile banking, and clearly all of that is important. But we said, listen, if you're going into a remote village what is the face to the customer? And we also were aware that there's been a long history of people being cheated, many people coming in, taking deposits, disappearing, right? So our country has unfortunately had many episodes of these. So trust is what you're fundamentally solving for before anything else. And that's how we approached it, to say that we will put in all of the technology that's needed. But at the end of the day, there must be a face to the customer. If the customer is having a problem, there should be somebody who they can turn to, rather than a sense of, oh, this organization is actually somewhere remotely sitting in Chennai or Delhi, and I don't really have a way to reach out to them. So we went against, I think, all the advice at that point, and we continue to put up physical branches. These are not expensive branches, but the sense of there is a building, there is a wealth manager, we believe gives a sense of permanence and trust, and a sense of, my money is secure. Which again, going back to finance, that's fundamental. For example, when you do sell pension products to customers, and we did that for a long time, the NPS product, implicitly you're telling them that, give me your money today, and 25 years later, right, when you need it, I will be here. Not only will I be here, I will be there to give you the money that you've been setting aside as your nest egg for retirement. That's a huge ask from any customer, particularly a first generation customer. And I think you've got to approach that, the sense of how do I build that trust, and what do I need to invest in to create that sense of long-term and permanence, without which I don't think you're going to get very far. Certainly to go beyond lending, this is fundamental, because in lending, you're giving your money. So in some sense, you are taking the risk on the customer. But for products like pension, insurance, etc., it is very much the customer taking risk on us as the institution to say, when I need it in the future, you will be around. So our distribution, currently is sort of a combination of, and as you can imagine, over 10 years, it's evolved quite a bit, but we still prioritize the physical location. The wealth managers are equipped with tablets and all of that, and they go out into the community. They do a fair bit of doorstep services. We're also working right now to equip a set of merchants in and around the branch so as to complement the branch. So I think distribution will evolve, but the idea is proximity, trust, and a reliable sort of face to the customer. We think that's going to be important going forward. The next slide, please. A fourth insight, which many of you may have heard this, I really love this, and it captures so much. Retail is detail. And what you see on the slide here, this picture, is actually the first store of Starbucks. This is at Pike Marketplace in Seattle. And the reason I put this picture here is because a lot of what I have learned, we as Dwara have learned about retail financial services actually is from Starbucks. And in particular, we had a mentor, Deidre Bajer, who used to be a senior person at Starbucks. She helped launch Starbucks in Japan, the first set of stores in New York. And when we met her, she said, listen, I know nothing about finance. I know my coffee very well. But what I do understand is how to build a high quality retail organization. And that turned out to be an amazing partnership for us. And again, I think the retail financial services industry worldwide, and of course in India, has not really approached it with the kind of detail and rigor that I think people like Starbucks have. So to give you some examples that, what did we learn from them? What are some of the specifics? Every store of Starbucks, when they start in the morning and before they open for customers, they have a ritual which is called a coffee tasting. So the store manager, who's kind of the equivalent of the branch manager, and all the baristas are the equivalent of our wealth managers. They all get around in a huddle. And they pick a particular flavor of coffee that they are perhaps showcasing that particular week or month. And they all sit around and do a very elaborate coffee tasting ritual in which they sort of smell it and, talk about where did the beans come from and, how does it taste. You see it as an outsider, and we had the good fortune of being able to shadow some of these people. It's an incredible sense of community and bond that is created around that morning ritual. And the idea, which Deidre explained to us, was to say that if you have a large network, multiple branches, multiple stores, in their case, in multiple continents, you need things that sort of bond you across the organization and remind you about what is your true purpose as an organization. For Starbucks, it's clearly about the coffee, and doing that every single day across every single location really reinforces a lot of that sense, much more than a mission statement that is stuck to the wall that nobody's going to look at. So that's an example of, I think a really wonderful ritual. We spent some time thinking about how do we adapt that to our context. We were really kind of bowled over by this idea of a ritual that unifies all of the branches. And in our case, we do a huddle around a particular customer whose kind of case is discussed by the branch before all of the morning rush and cash and products and so on starts. The idea is to say, remind yourself that you are here. What we are about is the customer. It's not about the cash or the gold or the technology. So that's one example. Another, just to give you a few more things about what Starbucks does really well. They have this thing called a values walk, which is to say, when an area supervisor, like an area manager, in our case, a regional manager, when they visit the store, and we've all seen this in our organizations, right? There's always like a the boss person who visits, and sometimes they're just kind of hanging around, or having a little chat with the customer, or chatting with the employee at the branch. There doesn't seem to be really sort of a method there. What we learn from Starbucks is they have completely codified, what should you do when you visit a store as a supervisor. And they have this notion of a values walk, in which the supervisor walks along with the baristas and the store manager, and they have a checklist of things that they look at, covering things such as the cleanliness, how you have laid things out, how are you responding to customers, so on and so forth. And I think that was a real realization for me, that even the smallest things, when codified well, can make a huge difference. The other thing that Deidre pushed us to do, which I'm super grateful for, that insight, again, seems pretty basic, was to say, she said, you've got to have a uniform for your wealth managers. And that was not something that we were thinking of. And we were like, oh, is that worth the effort? And she was coming from a deeper insight. So her point was that you are recruiting people from the local villages, and we are serving customers in those locations. Now, these locations are, have all kinds of issues, right? There are deep-rooted problems around caste, discrimination. If I'm from the upper caste, I will not serve a lower caste customer. Unfortunately, that's very much the reality of our country, particularly so in rural areas. And so she said, you got to find a way to de-bias your staff. You cannot have them bringing those kind of biases into your branch. And the idea of a uniform, something as simple as that, is to say, you are free to have your own beliefs, your own values that you affiliate with. But when you wear the KGFS uniform, then you are a person with a different set of values. You're a professional who signed up for this following code of conduct, and you leave behind your baggage and your biases back at home. So, we've implemented many of these things, and I'm sure there are many, many more to go. But I think it's a real reminder of, when we look at the business through the eyes of the customer, through the eyes of the employee, there's going to be a whole set of things that are important that we otherwise miss out. And I have certainly been really, I think, hugely appreciative of all retail business leaders, just from our experience over the last 10 years. Final slide. I do want to leave time for questions. My fifth insight is a little bit generic. And it's this idea that when you're going up against a certain, way of doing things, this is the way finance happens. We've always done, product-based sale. What is this idea of wealth management for the poor? That's ridiculous. There will always be skeptics, and I think that's not necessarily a problem. But I think as leaders, it's clear that the big sort of thing that we have to do is to build an army of believers internally, who sort of take that on. And this is a picture of the recent space shuttle, Elon Musk space shuttle, more as an idea of something that was so outrageous, so ambitious, but they actually pulled it off because they had that sort of belief in themselves and their capabilities. And this boils down to a few things, which again has become clear to me in the last few years. One is to say, when you set up a financial services new company, for example, your temptation is to say, okay, let me hire people from that industry, people who know how to do this, who've done credit before, who've done risk before. And there is something comforting in knowing that, oh, you're getting like solid, experienced people. But that's actually a bit of a problem, because, when you're trying to change the industry and you're hiring from the industry, I think it creates a real clash in terms of people are used to doing it in a certain way. And I think we've experimented a lot with this. Our first cohort of KGFS heads, for example, we hired them from IIM Ahmedabad's program, which was doing a one-year MBA for armed forces personnel. So people who were earlier in the army, air force, etc., who had never done anything in finance before. But I think the fantastic thing was they approached it with a clean sheet. They were obviously very, very good at managing teams, managing operations, managing challenging situations, because, obviously that's a talk for another day, but it's not easy going up against the local money lender and, eating their lunch, right? It creates all kinds of other issues as well. So I think for us, that's been an interesting learning to say, resist the temptation to necessarily hire people only with similar experience, but bring in people with new perspectives and see how you can sort of jointly build that new model rather than stick on to that status quo. And the kind of final point around this is also to say, going back to our wealth managers, like I said, these are people from the community. These are sons and daughters of farmers and kirana shop owners. For a long time, we were very focused on the end customer and to say, let's do this and let's change their life. And, let's, how wonderful would it be to make pension available to people who don't have formal jobs. And then we realized that we were making a fundamental error, that we were not thinking about the wealth managers. The wealth manager, these are all alien concepts for her as well. And it's like you are a computer salesperson and you've never used a computer before. So if you've not experienced the magic, how are you going to convincingly be able to talk about it to people who've never used it before either? So I think that was a really interesting lesson to say that, let's make sure that we focus also on our own teams, our own front line. And if they really feel the noise cancelling headphone effect in their lives, they will be evangelists. They will take it out to customers. They will take it out to the community. But if they don't relate to it, well, forget it. You're not going to get that done. So in the interest of time, I'm going to pause there and would love to get questions and comments.
Yes, thank you very much, Bindu, for a very interesting session and for sharing your insights on rural India and your journey. I think just for the benefit of our audience, what sticks with me on these insights, I just want to relay that to everyone, and I think that's pretty much these insights are valuable for many businesses. If I can take the liberty to say that, to start with the customer, not the product, bring real expertise to the table, address the issue of trust, retail is detail, and create an army of believers. That's my favorite one, Bindu, and I'll start with that. I see a lot of questions coming from our audience, but the first one is always mine. So, why don't you just start by telling us? It's very interesting for our audience to know your personal journey. How did you think of getting in? How do you think of building a career in this direction? And what were your challenges at that point in time? I'm sure it must not be a cakewalk for you. So I guess it'll be good for our audience to know about your personal journey so far.
Sure. No, and I'll try to be brief, but like I said, I worked in financial services, financial inclusion all my life. I joined ICICI from campus, and I did my first master's from IRMA, the Institute for Rural Management. And while there, over the 2 years, I had done an internship with Vijay Mahajan in Basics, and was at that point, as a 21-year-old, already fairly convinced that there is great power in financial services. And I think particularly for me, what stayed with me was there is a certain dignity when you say that, rural areas, poor people, the issue is not capability. The issue is that often there are not tools to manage risk. There is not access to capital. And rather than preach about, what you should do with your life, the best we can do is to make those tools available. So I've always been really attracted to that idea of finance as providing the tools to you to do whatever you want. I'm not going to judge what is good for you or not. So I joined ICICI and was part of the team. It was a great time to join the bank because the bank itself was in 2001 starting to, get into the rural market and the agriculture. So I was part of the team that built the microfinance business for ICICI along with a really amazing team. So I did that for a while, and then, it became clear that we need a lot more business model experimentation. I think ICICI was a real pioneer at that time in terms of what they were willing to do. But at the end of the day, as a large bank, there are multiple priorities. RBI is, breathing down their neck about what they can do, cannot do, and it felt like, there is a need for much more just fundamental redesign. So we actually set up the Dwara with initial capital and support from ICICI. So it's a much easier entrepreneurial journey relative to many others. And so the challenges for us were not so much around capital, but it was much more around, kind of getting the thought process right, getting started. And I would say a continued challenge is around making sure that we are kind of aligning all these big ideas and mission with what we actually do on the ground. How do we make sure that we get investors? We were lucky to get ICICI as the original investor, but as you know, finance is a capital-intensive business. KGFS now serves about 1.2 million customers, and we've done multiple rounds of fundraise. And it's not always been easy to find partners who kind of are aligned to this notion, because everybody wants to go back to the familiar. Let's do the product view. That's scalable. Look at the microfinance industry. They have fantastic ROEs. What are you guys now trying to sit and, reinvent this? So I think our challenges have been much more around making sure that we find kind of the right kind of alignment, both internally as well as externally. But that's really been my journey. So I started Dwara 12 years ago, and it's been the journey of a lifetime.
Thank you, Bindu, for sharing that with us. Now, the first question I'm picking up is from Samarth. And Samarth wants to know that so India and rural India, or Bharat, as most people prefer to call it, appear to be two distinct worlds. Yet they are so tied with each other for collective success of the country and growth of the country. So can you tell us about what distinct differences that you have seen in rural India when they look at financial management, financial planning, as compared to urban India?
No, it's a great question. And like I said, I think there are many things in similar. I think the financial services industry is failing both the urban Indian as well as the rural Indian, given sort of the product and cookie cutter approach. You and I don't have access to the kind of, I think, good advice that we'd like. Instead, even if you do have a wealth manager, it's really somebody who is coming to, is a product marketing person, right? That's very clear. That's what their goal is. It's not truly a wealth manager in the sense that we talked about. So I think there are many things in common, and particularly the fact that we don't have access to good advice, good institutions that are looking out for us. Instead, the concern is always, oh, what is this? I should be careful, not walk into this trap. So many of us have, been sold bad life insurance policies that are not really appropriate for us, with very high lapsation rates, on and so forth. I think the things that are different, I think the number one thing is that if you are a salaried person versus somebody who has seasonal income, it's just a fundamentally different challenge. Because imagine if I told you that, your new kind of salary structure is that you get paid all of your salary. Instead of every month, I will pay it to you at the beginning of the year. Same amount, but, I'll pay it to you one shot. That completely changes the dynamics of your money management challenge, because now you've got to take that lump sum, and your expenses are continuous, right? Expenses are every day, and it peaks around certain, school fee season and festival season. So stretching that money over that full year is a fundamentally different and stressful challenge, and that is what I think rural India lives and breathes. And you end up getting a lot of distress because, in some sense, you run out of money, and there is no salary to fall back into. But otherwise, I think many of the kind of core issues are the same. What are good avenues for us to save, to invest? how do we access truly good risk management instruments rather than, insurance. One of my kind of concerns with micro insurance, for example, has been that it's again an FMCG mindset. It's like the sachet idea that we have the full bottle shampoo for the urban market, and then I have a sachet for the rural market. In the case of a shampoo, I think that's an interesting idea. But when you think about financial services, that is unfortunately got interpreted as saying, I will sell 10,000 rupee micro insurance, life micro insurance policies. And even for the poorest household, a 10,000 rupee insurance policy is completely inappropriate and completely inadequate. So, I think we are not doing enough in terms of product innovation from a first principles perspective.
I think fair point. Bindu, I'll just take a follow-on question from what Samath has asked, and Shweta wants to know. There's so much buzz about technology, digital transformation, mobile phones in rural India, internet penetration. How do you see in your field this is really helping change the game or helping you, with this agenda of financial inclusion and financial management in rural areas?
No, I mean, it's an amazing opportunity. And again, I think technology has to be thought of as part of the solution. The idea is not to start with, mobile banking, but to say, in what ways that help me accelerate? So the main kind of issue, I think, is around costs. It's very expensive to do a 10,000 rupee loan, a micro loan, or any kind of small ticket loan, because there is a lot of extensive due diligence involved, assessment, so on and so forth. I think the real opportunity is to think about how can we redo our operations. For example, there's a lot of inefficiency, both in regular banking as well as in this context in which people are filling out multiple forms. You do KYC multiple times. So if one customer has walked in and done KYC for a loan, and then she comes back 2 days later and says she wants to buy a mutual fund, typically we are making her do the whole thing again. So I think developments like eKYC, etc., are amazing in all of these contexts because it significantly reduces the cost of acquiring the customer, of handling the customer. And of course, what we hope that means is that we can reduce the price that the customer is facing. One challenge that exists is very much that microloans, for example, today continue to be, even in our context, are priced anywhere between 18 to 24%. That is pretty high relative to what you and I can access, and a lot of it is cost of operation. So I think that's exciting. And I think there's also just newer ways to deal with the customer. You can serve the customer even when the branch doesn't make sense. During this whole COVID, for example, because we've been able to work with Aadhaar-enabled payment services, we said, let's make sure that people can access the subsidy that the government was paying out, rather than go far away and stand in a line in front of a bank branch for hours and hours. Can we make that subsidy available? And through initiatives like Aadhaar-enabled payment services, it's indeed possible that you can access the cash in your account at any outlet. You don't have to go to a bank branch. ATMs are not available in rural areas. So the human agent or the business correspondent or our wealth manager, those can be. So a lot of it is removing the friction in financial services, which is, I think, very, very important.
Thank you, Bindu. The next one is from Rajat. I think you answered this question in part. Maybe you want to add on to this. So Rajat wants to know that, given concept of wealth management in rural India, when, like you mentioned in your presentation, the income itself is so seasonal and you don't even know whether next month, what your income is going to be. So how do you really convince your customers? How do you convince, your audience to appreciate what you're trying to tell them?
Yeah. And again, I think that it starts with walking away from a product frame and saying, what do you want to do? And people, irrespective of incomes, are incredibly passionate, obviously, about building a better life for themselves, for their kids. I mean, we are always so struck by the level of ambition that people have around their children, education of their children. There is some regional variation, but by and large, that's the number one sort of priority for families, right? And I think you want to start with that. If you start with saying, hey, I'm here to sell you a mutual fund, that produces a very different dynamic than tell me what you want to do in the next 5 years, in the next 10 years. And then our role is really to say, okay, what do you need to do to make it happen? I think, unfortunately, the way we are doing finance today in India is to sort of throw a lot of products and jargon and, buy this ULIP and buy this, blue chip fund. And, we often take an analogy with health to say that it would be like the doctor saying, here is antibiotic A, B, C, D, and E. Why don't you decide what to do? It's a little bit, kind of analogous to that. You are supposed to be the expert. What the person cares about is their health or their life goals, as the case may be. And we have to help figure out how to make that happen. And so I think if you establish that credibility with the customer to say, that's what you're trying to do, you're not here for a quick transaction, I think you will find a very different level of eagerness, which has been our experience.
Sure, fair point. That Bindu. Okay, just doing a time check. Got time for a couple of more questions with your permission, Bindu.
Sure, please.
This one is from Srinath, and it's a different question, sort of takes us away from the topic of financial management a bit, but keeps us still in the domain of rural economy. So Srinath wants to know this is labor exodus, which we have seen like never before happening due to this pandemic. So one of the perspective is that it's going to be a reverse labor drain, which basically means it's good for the rural economy and for agriculture because labor is moving there, and hopefully they'll stay there and find ways to stay afloat and add to the economy. And the other perspective is it's just a matter of time where you have, all of them move back to the towns and the cities. So, what's your perspective of what's happening in this situation, and how do you see this going for the rural India?
Yeah, no, great question. And my sense is that there is certainly not enough opportunity, employment or entrepreneurship to accommodate all of the exodus, right? So it's a matter of time before there is, movement back. Because at the end of the day, I think, urbanization, migration is a very economic response. You go where you have a sense of, despite all the hardships and everything that we've seen so starkly in the last 3 months, how people are completely willing to throw you under the bus. But at the end of the day, you make that journey because it's your ticket to a better life for yourself and your family. So there is a certain economic pragmatism that underpins the decision to migrate, which is, I think, worth appreciating because it's a hard life. People won't do it if they had a option to have a good life in the village. Having said that, there is obviously, it's not that villages are dead economic zones. We find in our own work, because we are a focused rural financial services provider, that there are plenty of options, high return opportunities, for example, in non-farm sector. Agriculture, of course, continues to be dominant, but there is a fair bit of diversification into processing services. Services is a big part of the reality in rural areas. So trading, so on, but also services like beauty parlors is definitely a thing in rural areas. Repair shops, mobile phone related commerce. So there is a lot of opportunity, and that is precisely the place where I think access to capital can make a big difference. We find that a lot of the additional wealth that gets created for our customers is because they've been able to sort of, at least one member of the household makes a transition to non-farm work, either as a job or self-employed. But at the end of the day, I don't think that can absorb all of kind of the labor that's returned. So I think there will be a reverse movement, and it's not the worst thing. Because also the links, I think, is important to appreciate. For example, many households deliberately have one member who's a migrant elsewhere. And that's also a way of managing risk. So in Orissa, where we've had branches for over 10 years now, and Orissa is quite prone, as you know, to disasters, cyclones, particularly in the coastal belt. A very important way in which people bounce back is remittances. So, think of it much more as a linked, the household is actually one foot in both places. Some households will entirely shift when it feels like they can build a good life. But until then, most of our people are seasonal migrants. So one leg here, one leg there. And I think that continues.
Okay, the last question for the day is from Ritu, and it's an advice question, Bindu. And I suspect this is not necessarily for the rural customers, but Ritu wants to know, given the current situation, what advice do you have for people at large, rather employed people who are salaried? How should they conserve or preserve their finances during this crisis? What should be their strategy?
Well, I don't have a specific kind of thought there, other than the fact that this is certainly something that none of us have seen before, and everybody, some people have continued income. We are the lucky ones, and therefore it makes sense for us to continue with our SIPs and make sure that we have adequate insurance, as we should at all times, not just during these times. I think the harder challenge is, of course, for people for whom income has disappeared, and this is really when they are dipping into their nest egg. And this is a reminder of, I think, the personal finance advice that we all kind of keep hearing, to say we have to build a bit of a nest egg. So typically 6 to 8 months of expenses for any kind of emergency, right? In this case, it happens to be an event of this nature, but it could also be a loss of job. It could be an unexpected life development. So in some sense, I think it's also a good reminder to have those kind of buffers, and build those buffers in systematic, careful ways, not leave that money in savings bank accounts, which, are simply not good enough, but find sort of disciplined ways to invest over a long term. This is the time to use those nest eggs for those of us, unfortunately, in that position. But beyond that, I really don't have any sort of generic advice.
Thank you very much, Bindu, for the session today. It was very insightful. I'm sure our audience had a lot to gain and learn from what you shared with us. To me, it's given me a lot of perspective, but I could never imagine the concept of wealth manager in rural India. So, but after going through your presentation, it's opened up a lot of thoughts for us to think about as an organization. And I think I must thank you for sharing so openly with us, Bindu. It was a pleasure to
Sure.
have you with us. Any last word for our audience? Anything that you want to share as a message to everybody who's listening to us today?
No, nothing. And I think, all of you are, very cool to log on and spend your evening listening to these talks. I think that's certainly been the silver lining for the past several months, to be able to access, I think, kind of content and ideas that either we didn't have the time for, or, and so a big congrats to Future Generali for building such a powerful platform, and for all of you for engaging with it. Thank you very much for your patience and for your excellent questions.
Thank you so much, Bindu. And I would like to thank all our audience today as well for joining us. It's time for me to pick up two lucky questions. And this is in no specific order. I just picked two questions. So all the questions were brilliant, but I have to pick two. So the first question would be Samarth. Samarth, who asked the question about um, rural India and Bharat and India, and how do we see the difference between the two, India as we know of. And the second question is, I would say, Srinath, uh, which is a question around labor exodus and the impact it will have on rural India and urban India. Thank you very much for asking these questions. Congratulations, Srinath and Samarth. Do send in your email IDs to us so we can ship the voucher to you. And a big thank you to all of you who've been listening. As Bindu said, you are pretty cool that you're logging in the evening, listening to these sessions. These are very, to me, they're a huge learning experience, and I'm sure each one of you is gaining your, time's worth investment that you're making in listening to all our leaders and speakers. So thank you very much for joining us. In the end, I would like to thank our community support partners. As always, they're doing a fabulous job supporting us, helping us reach out to a larger audience. So thank you, Adgully, Paul Writers, Netcore, and Resulticks for being with us and spreading the message across the community and helping us reach out to a wider audience. The next session is on Friday. We have another spectacular speaker, Mr. George Day, who is going to join us on Friday, 6:30, and and I look forward to that session. I'm sure all of you will join us. So don't forget to tune in coming Friday at 6:30. Wish you all the best. Stay safe.